webinar begins in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. And we're live.
It's our brand new weekly Wednesday webinar format brought to you by Real Estate Investor and Eland Property Group every Wednesday at this time, 11 o'clock. There's been some really exciting changes to our new webinar series format, and we are excited to bring you this brand new show format called Let's Talk Property in conjunction with Real Estate Investor and Eland Property Group. It's our weekly property thought leadership webinar. My name is Neil Peterson, founder and editor-in-chief of Real Estate Investor Mag and the digital platform, and I'm really honored to be your host today. I'll be sharing the hosting seat along with Derek Watts on alternate weeks at this time every Wednesday from 11 o'clock to 12:30 to bring you the very latest and best insights, resources, news, investment opportunities on everything around real estate in South Africa and the globe. And today our webinar topic focuses on where to next for the commercial property sector in South Africa post-COVID-19. So today we have a stellar lineup of commercial experts on our panel today who will introduce themselves shortly. I welcome the panelists and thank you for sharing your valuable insights and knowledge and with this information-hungry audience today. So first of all, to you, the audience, a very warm welcome to you, and we welcome your interactivity and your participation in today's webinar. So for best audio and visual quality, please switch off all other streaming videos or anything that slows down your signal. You will see at the bottom of the page, there's a Q&A box, and that is for any questions that you'd like to pose to the panelists. Just put the panelist's name and your question, and we will try and deal with all the questions that come our way. Then, of course, there's a chat box, and the chat box is for any technical issues or any general queries that you have. We will also have a poll with multiple choice questions that will pop up on the screen at regular intervals just to keep it interactive, and we require your feedback. So let's move on to our topic for this week, and that is where to next for the commercial property sector in South Africa post-COVID-19. And we know the world is a crazy place right now as we navigate lockdown and COVID-19 and see the effects across business, real estate, and across various industries in South Africa and worldwide. And today, believe it or not, it is the 15th of July and it's the day 111. Can you believe? Lockdown alert level 3. We've also been reintroduced to our other L crisis counterpart called load shedding, stage 1. And in fact, I must not forget our third L counterpart as well, which is liquor sales ban, stage 2. And that seems that the 3 L's in the various stages will never part by the look of things. So let's get on to the subject of the day. The South African commercial property sector has taken a significant knock as a result of lockdown and COVID-19. Historically, property has generally managed to recover and beat the market, even during really tough economic times. But this time, oddly, it does seem a little bit different. But there are many losers, but there are also winners emerging as well. So we're really seeing in the tech world, all the tech billionaires, 7 out of the top 10 are from tech. And in fact, our very own South African-born Elon Musk is now the 7th wealthiest in the world. So let's get back to the subject of commercial. Many offices, retail shops, and warehouses were closed as a result of lockdown and created massive challenges for rental collections for landlords, financing property arrangements, restructuring of finance, payment holidays, and I mean, let's just not even get into the construction sector, which we'll also hear about today. So the questions we want to ask is what's next for the office, retail, industrial markets, and all the related construction industry, and also involved in new developments. So what are the challenges and what are the big opportunities? We've got our panelists here, and I'm going to ask each one of them to introduce themselves individually. So without further ado, Evan, could you please introduce yourself to our audience?
Right. My name is Erwin Rode. I'm the MD of Rode and Associates. It's a company that is 32 years old. We call ourselves property economists. We are professional valuers. We are a significant valuation company. We do town planning, and generally do quite a lot of consultancy work. Consultancy work covers a very wide spectrum, but most of the time, of course, it's got something to do with property. We are best known, probably, unfortunately so maybe even, for the property reports that we put out. These are researched property reports. They are not just opinions. We survey the property market quarterly in the major cities and also some secondary cities like Polokwane and East London, Port Elizabeth, Bloemfontein, even Windhoek. And that initially gave us standing in the marketplace, and but of course right from the start we also did valuation work, and consultancy work came a bit later. But at the moment, consultancy work is quite an important part of our work.
Wonderful. Thank you, Evan, and very welcome to the show. Alan, please introduce yourself.
Thank you, Neil, and welcome to all the panelists and all the listeners. My name is Alan van der Westhuizen. I represent a company called IWG, the International Workplace Group. We are, in essence, one of the largest providers of flexible co-working office space, with 3,500 outlets around the world globally, and we have a footprint in South Africa of about 58 centers in the main metropolitan locations around South Africa. And we are in a position now where we want to be able to take flexible co-working to all the suburbs in South Africa, particularly now that post the pandemic, that a lot of people have started realizing that flexible working strategies can actually work. And obviously, it's something that a lot of companies might start adopting going into the future.
Wonderful. Thank you, Alan, and we look forward to having a chat a little bit later. Marius, please introduce yourself.
Thanks, Neil. I'm Marius Miller from Veneta. So Veneta is a fairly new entity. Started on the 1st of July this year. A little bit of my background: I've been in the listed sector since 2002, and at the end of June I left the listed sector, being the CEO of one of the small cap funds. The focus of Veneta is on the consulting side as well, but we do have an investment focus, although we do provide services such as asset management, development management, and so forth. But we've taken a position that the traditional sectors, property sectors, are under pressure at this point in time, and we think that we need to look at alternative investment products. So our focus is very much on the private equity side, and particularly focusing on healthcare as well as the residential sector. And within the residential sector, looking at social housing, student housing, and retirement accommodation. We feel that those sectors have not been, they have been invested into, no doubt about that, but they haven't been institutionalized. And so we believe that there's an opportunity to formalize that to a certain extent, bring some sort of governance rigor into it, and access capital as well that may be seeking a home, wants to be property, but not at this point in time in the traditional sectors. We see that as an international trend, and so Veneta is going to be playing in that space. Thanks.
Wonderful. Thanks, Marius. And we also look forward to your views also on the listed sector as well, and we're having such a long background in that area. Our next guest, welcome to you, Andrea. Please introduce yourself to the audience this morning.
Yeah, my name is Andrea Taverna-Tourism. I'm the Chief Executive Officer of Equitas Property Fund. We are the only purely logistics-based property fund on the JSE. We have about 65% of our portfolio in South Africa and about 35% of our portfolio in the UK. We really have jumped on the sector-specific bandwagon of, the proliferation of e-commerce. That's where the idea sort of came from quite a few years ago. We listed in 2014, and the idea was formulated sort of around 2011. my history pre-listing was as a developer, and I had my own personal portfolio of logistics warehouses let to blue chip tenants, and that philosophy and strategy was brought into the listing, and obviously we've grown the vehicle from a 1 billion rand portfolio on listing, and we will be sort of around 20 billion by the end of this year.
Wow.
So we've done some substantial transactions in South Africa and in the UK, but we're tending to veer towards more the development pipeline for new business now, as the technology required for modern logistics units makes a lot of the sort of previously built units maybe a little bit technically obsolete, very difficult to retrofit to be fully functional and operational in a modern logistics world. So in a nutshell, yeah, we're in a very exciting space. Obviously, the pandemic has, to some extent, put a lot of focus on us. In the UK in particular, where e-commerce proliferation was already fairly substantial at about 20% of all retail sales. I mean, the word on the street there is that the pandemic has accelerated the proliferation or the penetration of e-commerce by about 5 years. So that's obviously great. South Africa is slightly different, more linked to supply chain efficiency and bringing, businesses bringing efficiencies in and reducing the operating costs to basically meet modern requirements, and also the demands of customers are becoming sort of more and more stringent, with people requiring deliveries to be made more timelessly, and the only way to do that is by incorporating certain technologies and certain ways of operating, and the real estate function in that is fundamentally important. So yeah,
wonderful. Well, it seems to be an extremely vibrant space, as you said, Andrea. Very warm welcome. We look forward to having further chats with you a little bit later and engaging. Wayne, please introduce yourself.
Thank you, Neil. My name is Wayne van der Vent. Perhaps I should start with my previous life. Will explain my current life. I used to, for a very long time, be head of properties for the Public Investment Corporation, and so sat on the side of the investor asset manager for a long time. And during that time, one of the achievements I had was to acquire the V&A waterfront back from Dubai World together with Growthpoint. And those experiences, I did 50 billion rands worth of transactions over a 5-year period. Those quickly taught me what not to do and what to do. And so in the last 5 years, I've been involved in work for a company called Coin Online, and we build property software in the transactional space, mainly sales, and over the last year, 18 months, we've been in the rental space. That has, over the last 4 or 5 months, suddenly seen a nice uptick for us in keen interest from the retail, from the commercial space, because it is a way for players to continue transacting, whether it is for sale or whether it is for rental. Throughout the pandemic, it allows for the mobility issues that we are suffering from at the moment to be addressed. And I think Andrea made the point earlier about e-commerce, where they say that within the last 4 months we've advanced almost 8 years, 5 to 8 years, in terms of the take on of technology. And I think one will see that technology take on similarly to how it was with us in the commercial space a few years ago, when we started the Green Building Fund. We thought it was a nice idea that may never take off, but Eskom helped us along by starting blackout soon after we started, and suddenly it became a real thing because people needed to focus on it. And then in Cape Town, the drought came along, and so now the Green Building Council is here to stay. And I think you're going to see the same in the prop tech space for property, irrespective of where we land. And I'm keen to hear what people have to say about the future of commercial space, but irrespective of where we land, I think the prop tech element of it is going to play a more important role going forward.
Wonderful. Great. And we look forward to chatting about that. Mike, please introduce yourself.
Thank you, Neil, and good morning all. My name is Mike Mortimer. I have a national responsibility for the SA coverage division of ABSA Commercial Property Finance. Broadly, the role we play in the property industry is a multifaceted one from a funding point of view. We provide funding across the entire geography of the country and into a number of African jurisdictions, cross-sectorally, and then also just in terms of pure deal quantum. We have on the one hand a very big owner-occupied business, as we call it, where we're funding investors to acquire premises that they operate from themselves, and then also a very strong sort of focus into the investor and developer market. Particularly, as I say, I suppose our main focus would be in the traditional sectors of office, industrial, retail, but also strong exposure into mixed use, some into hospitality and the like. We also have specific disciplines within the listed property sector and a strong sort of push into that part of the industry. We see big growth opportunity into the broader affordable housing sector. So another area where we have specific focus into, but by and large, a business that covers the full spectrum of the commercial and industrial property sector from a finance point of view.
Wonderful. Great. And we look forward to chatting a little bit later, Mike, to uncover that a little bit more. Last but not least, Dion, please introduce yourself.
Thanks, Neil. I represent the Western Cape Property Development Forum on the one hand, and then for a living, I work for a company called ALNA. We are development managers and project managers. But just on the work of the Western Cape Property Development Forum, we're a voluntary organization focused on the production line of property. So literally everything that happens between the idea and the handing over of the key to the end user is what we see the production line to be. The irony is you reference the construction industry, but the construction component is actually quite a small part of the production line of property. And from research and experience, we know that the statutory approval process is really the conundrum that most developers struggle with, and also prevents people servicing their clients in a quick turnaround time. We're a regional organization. We're focused on the Western Cape, and we deal with local authorities locally because that's where the bricks and mortar hit the ground. It happens at a local authority level. And from an industry experience point of view, our biggest frustration in South Africa generally is the fact that all of the statutory processes, the cumbersome and non-aligned statutory environment that we work in is probably the biggest disincentive for people to experiment in property, and also prevents young developers, SMEs coming into the industry. You need a seriously long breath and a very big war chest if you are to survive the statutory process of any development. And we lobby and we work to try and reduce that and create a investment-friendly environment.
Wonderful. Well, look, we look forward to seeing how we can improve that and how we can make that better. And let's hope we can have a robust debate on that. But welcome to you, Dion. Okay, let's move on to our questions. I'm going to ask each of our panelists, and we're going to go do a full round, and then we'd like to get some robust debate and discussion going, and also questions from you, the audience. As I mentioned, just as a reminder, there's a box on the bottom with the Q&A box. Just if you want to ask any of the panelists a question, please fire away over there. I'm going to start up with you, Erwin, because you've got a satellite view of what's actually happening in the commercial property market. I mean, for more than 30 years, you've done the Rhoda report, and on the entire state of the South African commercial property market. And I know you've done rigorous research on market rental levels, cap rates, valuation stats, etc., and the like. So I'm going to ask you the big question because, and I know it's going to be statistically driven, and I know you've got very powerful views. What are your predictions of the commercial real estate sector for the next 12 to 36 months? I mean, where do you see this going? I mean, with the general economy as a result of COVID, it's a real tough question. And when do you actually see some meaningful recovery? And if so, when and where could those places be?
Right. Even though I'm not an economist, I'm going to speak like an economist. You've got to go first forecast the past before you can forecast the future. The property market cycle is very, very long. It's anything between 15 and 20 years, and which means that it makes it rather easy to forecast long-term trends in a certain sense, except that you can never forecast the turning points. But this goes for all variables in economics, of course. The turning point is always the problem. Now, as for the trends, let's first look at the office market. The office market, in real terms, rentals, in other words, after having taken out building cost inflation, in real terms, office rentals have been declining now for a very long time, since about.
Evan, can you just check the volume levels on your computer? I don't know if everybody's got the same as the rest of the panelists. You just lost a bit of sound. It's just gone a little bit softer there, Evan. So it's very important. You're making an important statement here. I think that's going to work. I think that's going to work really well. Great. Thank you.
Can you hear me better now?
Yeah, just the volume levels. It just seems a little bit soft. I can hear you, but it's just need to turn up the volume there slightly.
That better?
Perfect. Now we can hear you. Thank you, Evan.
Okay, right.
I broke your speed there. Yeah.
Yeah, no problem. So the last valley, or in the real property cycle, real office rental cycle, was in 1995. And then we had some robust growth as we, in all sectors of the economy, not only in South Africa, but all over the world, peaking in 2008, as we know, with the big financial crash. And after the crash, the downturn also started in the case of office buildings, also industrial buildings, real rentals, but office buildings, being more speculative, has been hit much harder than industrial buildings. So office buildings, real rentals have been coming down ever since the 2009, 2010, that, more or less that time. We've got data going back to 1960 for office rentals, and the current real level of real rentals, is actually already below the lowest we've ever seen since 1960. Now, in a normal recession, most economists would have forecast, okay, another 12 to 18 months, and we're going to have an upswing in the business cycle, and Bob's your uncle, a year or two later, the property market would react. However, and this is the important point, when COVID struck, we were already in a recession, and the recession wasn't. It was driven by fundamental factors, sort of stuff. Structural factors, sort of stuff that you can't solve overnight. For instance, the government's debt is out of control. We're heading for 100%, and after that, we're going to head for 110%. I don't think there's the political will to actually do something about the debt situation. And of course, the COVID crash has made it even worse. So we've got a huge debt problem. There are other problems too. I mean, Eskom. How can a modern economy grow without electricity? You know. So our education system is. So the brain drain. The list goes on and on. Mismanagement at many levels. Now. So this is much more than just a COVID thing. This is the important point that I'm going to make today. It's much, much more than COVID. It is a longer term thing.
to come back to the question of when is the upturn going to be, of course, nobody can tell. But given the factors that I've just mentioned, if it was COVID alone, maybe with the help of vaccines, maybe 3 years from now, we would have been back to 2019. Given the underlying malaise in our economy, quite frankly, I can't see when the upturn is going to be. On top of that, of course, you must always remember that the property market lags the economy by a year or two, depending on how big the oversupply was when the recession started. Which brings me back to office buildings, and we had an oversupply, a vacancy of about 10-11% at the end of 2019. So you could just imagine how long, once the economy starts growing again, should we be so lucky, then of course it'll take another 2-3 years for the oversupply to be wiped out, the vacancies. So I'm afraid I'm just a messenger. Please don't shoot me. To sort of confirm what I'm saying here is one of South Africa's foremost economics research institutions, latest medium-term forecast, by medium-term I mean 5 year, is in real terms GDP will grow on average over the next 5 years at, guess what, minus 0.1% in real terms. That is a forecast of a very conservative economics research unit. Well, they'll probably say they're not conservative, they're just realistic. But so this is how serious the situation is. Industrial, of course, is less volatile than offices, because industrial is less speculative. And in fact, in the past few years, industrial rentals have held up better than office rentals, because we didn't see the same oversupply in industrial. And on top of that, as we've already heard from Andrea, there is a specific niche that seems to be doing very well, and that's the 12-meter and higher warehouses for logistics. On top of that, Cape Town, where I'm sitting, has been doing much better than the rest of the country, even though Cape Town historically hasn't been and still isn't really known as a manufacturing sector. So it's quite amazing what's been happening in Cape Town's industrial property market over the past number of years. Far accelerating and growing much faster than the rest of the country. So if you had a portfolio in Cape Town and it was industrial on top of that, you would probably have done better than anybody else. Excluding maybe the big warehousing, I'm not so sure what's happening there. Andrea will be better to tell us whether the rest of the country is doing better than the Western Cape in that respect. Of course, retail. South Africa has always been a paradise for consumers. Our wives are the best consumers in the world. South Africa is unfortunately a developing country. We are not a developing country, we are a consuming country. And that's been the case for the past 50 years, as long as I have seen statistics. So retail has always, I mean the past 50 years, has been the place to be as a property investor, as a generalization, of course. That now, of course, I needn't tell you, we are only all too aware of what COVID has done, and we're also aware of what the slow, maybe now accelerating move towards e-tailing is doing. So I'm afraid retail's heyday seems to be over, especially if you consider that, in my mind, our metros, our big cities, are all overshopped. You can see it in the stats. Where do the new shopping center developments take place? It is in the Platteland. Why? Because developers have run out of options in the cities. So I'm afraid, given what e-tailing is going to do, and given the fact that many of our mom and pop shops are going to go under, or have already gone underwater, yeah, I'm afraid I think the oversupply of shop space is going to get worse. So all things, I'm afraid, sorry, I think I've now
you made us all depressed.
you know enough. Are you not pessimistic enough?
Thank you, Evan. Okay, so Alan, I'm gonna jump into you quickly here, because obviously it's not the best news. I think Evan has a, I mean, it's statistically driven, and it's very difficult to argue those points. But let's go a little bit into your world, into the co-working space. I mean, how has it affected it, and where do you see this thing going in terms of the co-working space? You just got to switch us up on it. Yeah, you're on. Great.
There we go. Sound back on. Neil, yeah, I think I have a bit more of an optimistic sort of view on it, but my view is specific to commercial real estate. I think it has changed, and it will probably never be the same, but it has changed. I think what's happened is that this whole coronavirus has been a catalyst for change. There's been a lot of CEOs and CFOs, the accountants that have thought about remote working strategies. They have, they potentially dipped their toe in implementing a remote working strategy. But what's happened now is Corona has been the catalyst. It's really just accelerated and been the kickstart for those strategies. And I think, in coming out of it, a lot of people will start looking at their cost base. They'll start reassessing whether or not they need the big floor plate, the big space. They need big office spaces with boardrooms that lie fallow for most of the time, and start looking at a more efficient way of creating an office environment. I think the office environment there will always be a need for it. There will be a need for people to have a professional environment to access office automation. There will be a need for people, especially client-facing businesses, to be able to host meetings and have that environment that lends itself to that. But it doesn't need to be an individual office, big space, a long onerous lease. It can be shared office space, it can be co-working, it can be sharing all those resources. The typical resources that you would have in our environment would be sharing a receptionist, sharing a printer, having an IT infrastructure that everyone can tap into. And that way you become a lot more efficient. You allow for your staff to work a lot closer to home. And also not necessarily, I think the office has evolved. Commercial space has evolved. It used to be bricks and mortar, and used to be a place where you go and sit inside four walls. Your office is on your phone, it's on your laptop now. So as everything starts digitalizing, people don't necessarily need to work in a typical office. They can work in an office environment. They can work from home. But I also think that home, as we've all probably realized over the last couple of months, is that there are limitations to it, and people do like to interact and be collaborative and be able to see other people and be in an environment that I think that is a bit more sort of conducive to work.
Great. Thanks. Okay, there's quite a few questions actually coming for you, Alan, particularly in that space. We'll deal with them a little bit later. I want to move on to Marius. Now, Marius, you've got a long background in retail and also in the office sector and now alternative investments. But maybe you can tell us, retail, I think Erwin set the scene very, very clearly in terms of where retail is going and office and that kind of thing. But what are the major issues, particularly by the listed REIT sector? What does one do to address these? Because, this is quite a this is a massive decimation in many cases. what does one do to address these things, particularly in that sector?
I think there's quite a lot rolled up into that one question, and maybe I can take it one bit at a time, and just to talk about the listed sector. And REITs are fantastic products, and we've seen that internationally that they've really held up well as an investment class. The truth of the matter is everyone's looked at REITs as a quasi-income instrument, and so a lot of investors have gone in there and they've looked at those funds to produce distributions and dividends on a 6-monthly basis. We've seen previously, during Mark Wayner's time, he had a REIT that did a quarterly distribution. We've seen others in Oz and Canada do monthly. So there's been this demand from investors to milk the cow every 6 months. And true to form, as an open economy works, we go where there's demand, and so we try and meet that, offer the supply that's going to meet the demand. And so the demand was for income. What we find now is that the REITs are finding themselves in a position where it's actually very difficult to continue producing the income that they had generated previously. So there's the underlying property issues that they need to deal with, collections and so forth. But the significant amount of pressure is coming from the banks, and rightfully so, because the banks actually, if you rank them in terms of real rights, shareholders stand at the back of the queue, and that's the risk that we take for a higher return. But I think most entities have either breached their LTVs and their banking covenants, or come close to that. And so, as a bank, as a credit committee, looking at REITs, I think there's many credit committee participants who do have concerns. Added to that, what we have seen is there's been a fair amount of international investment by REITs, and to add to that, we've seen a lot of assets, local assets, being put up as collateral funding offshore. Now, I quite like that approach, because the reality of the matter is that if you had a business, and let's say you're the holding company, I think it's important. In fact, I think it's a responsibility to go and source your funding wherever it's cheapest, and then deploy that for the best return possible. But with what's happened with COVID, what we have seen is that property values have come down, and we've seen the weakening of currency. Now, essentially what should have happened is that as the currency weakens, there should be a natural hedge across the sea, because that means the value of your property is going up. But now we've got this double whammy with COVID happening as well. And I'm pretty sure each and every fund, and maybe I'm wrong by 5 or 10%, but I think pretty much every fund who's had exposure overseas has been margin called over the last quarter. Now I think those are realities. There's no issue about whether it's the right thing or the wrong thing. Everyone liked receiving the income during those times, and I think everyone will work their way through it. But the challenge listed funds will have is a matter of, we've got this pull from the banks in terms of servicing debt. We've got this pull from investors in terms of needing income, because they've got requirements that they've got to meet. And then you've got softer things sitting in the middle, which is being addressed to a certain extent in terms of, if you're a REIT and you're not distributing, there's a risk that you may lose your REIT status because of JSE regulations. But that, I think, is something that's being worked on and will be overcome. But again, retaining income is not ideal for a REIT, because one of the main benefits that you have is that if you distribute your property income, that you're not paying tax on it. So REIT is a tax-paying entity. They just don't pay tax if they distribute, but if they hold back, there will be, there will be taxed. So I think that is a particular challenge that the REIT market faces at the moment. Is trying to correct, the capital structures.
Great, thanks, Maury. Sorry, just to interrupt. I know we're going to get through the entire panel, and we want to get into our debate as well. And I think it's important we hear every single one of your views. Andrea, you've just set the scene in terms of your sector. I mean, you built an incredible company, and it seems that from $1 billion to 20 billion, in fact, you guys are bucking all the trends of what's going on over here. So maybe just tell us, what has been the evolution of the logistics warehouse sector in the last 15 years?
So, I mean, obviously technology has been massive. As a consequence of that, historically, a lot of industrial space as it was defined would have been built, a very good quality spec would have just been an 8 meter to eaves building. It would have been probably a 30 meter yard, might have had 3 or 4 doors, some of them raised, some of them on grade, some with a ramp. And effectively it was a complete over coverage on the site. I think, with the evolution of logistics and the container as well, with I suppose the decimation of the manufacturing platform in South Africa has also exacerbated that within a South African context. In terms of the world, there's a lot of manufacturing is done in different parts of the world, and then everything gets brought into a central point, and you'll have a just-in-time solution for assembly of finished product kind of thing. So these are all the evolutions that have happened now to achieve the efficiencies required and to strip out costs. Obviously, technology has come in, and some of the places where the technology has come in, obviously, is in the warehouse in terms of, we've gone from, as I said, 8 meters. I mean, our entry-level product now, which we do as a standard, is 15.5 meters to eaves. So the amount you can rack up. But obviously, to do that, you need to have a super flat floor. Otherwise, your forklift, won't be able to get into the pallet sort of 14 meters up into the air because it'll be at an angle. So those kind of technologies, and obviously to instill those technologies comes at a cost. I mean, to get a floor specialist to come in and make sure that they cast that floor and it is super flat and it's super strong as well, because the point loads, you're coming now from racking that's going up to 15.5 meters and you're putting a ton on every single pallet. The point loads coming through the stems of the pallet into that floor are enormous. And so all these things need to be taken into consideration. And 15 years ago, I suppose, who was at the cutting edge of it? I mean, without blowing too much smoke up them, ShopRite were probably the first guys to go there. I mean, and they were at the cutting edge of central distribution. They were the first guys that were employing industrial engineers to really advise them how to do things best. And it's amazing how things have come full circle, and that we are in the process of finalizing a 3.3 billion rand transaction with ShopRite at the moment. So we will end up owning those warehouses. So that's where the evolution. The other one, obviously, is the size of yards. A lot of to bring containers up to Joburg from Durban comes with massive demurrage costs. So a lot of stuff gets break bulked in Durban, gets put onto interlinks, and then gets brought up. But now you're having, sort of 10, 20, 30, 40, 50 trucks coming through an hour in some of these warehouses. They need to be offloaded quickly. They need to be able to do turning circles, and they need to be taken out of there. I mean, we've got a client that had a warehouse which was just completely inefficient for him. We built him a brand new warehouse, and we took him into the 21st century, if you like. And he's a fast-moving consumer good client, and we took his truck turnaround time. We took it from 46 minutes. We took it to 16 minutes. And the efficiencies that brings, it's stuff that a lot of people you can't quantify. Everybody's talking about rand per square meter. The efficiencies of going from 46 to 16 is probably worth 30 rand a square meter, because especially when you're operating, 24 hours a day and 364 days of the year. And by going into the UK and dealing with, some of the leading 3PL companies, and we've got an Amazon box there. We've done quite a bit of negotiating with them over the years. We've got Kuehne+Nagel's, DHL's, DPD, who are they're at the leading end of the last mile delivery platform in the UK. So we learn those technologies, and and not everything is perfect. We're not saying that what we do is all rubbish. We actually are very good at certain things, and we've taken our professional teams over to the UK, and we've introduced them to the contractors that we work with and the developers that we work with, and they're gaining from that information. They're bringing it here, and one of the questions that I got asked on an investor roadshow, but what you're doing is not rocket scientists. Surely anybody can do it, and aren't people copying you? And the reality, the truth of the answer to that question is absolutely they are. And we, as they come up to our level, we push the button to the next one. So what we're doing a lot of in South Africa now is, we've taken sustainability on massively on our warehouses. Every single one of our warehouses that we're developing at the moment is going to be applying for a Green Star rating and also EDGE certification. And it's a double whammy. Firstly, the kind of client that we talk to, the international multinationals and the big listed companies, they're being put under pressure by their shareholders in terms of sustainability. So it's very relevant in their world. But also, there's also another element. The JSE has just sort of evolved a product which is going to allow for listing green bonds and the like, and there will be certain discounts and rebates associated to those things. So we're driving those things constantly in our portfolio in terms of what we do, how we do it, and I think that's what keeps us maybe one step ahead of, wouldn't say everybody, but of most. There are some extremely competent developers within the South African arena, and certainly many competent developers in the UK arena. But ultimately, we're on a massive journey and in a very exciting space, and we're really looking to push the boundary continually.
Wonderful. Thanks, Andrea. I think just, we've got quite a diverse, commercial property is very diverse. I think we need to do something specifically just on the logistics sector, because you just don't realize how much is involved in that particular sector. So I think we need to focus, guys. So going forward, I think we're gonna tackle that one. Wayne, I want to get to you, and I also want to get to you, Mike and Dion. There's a lot of things to discuss here, and I'll get to you all. So Wayne, you run a commercial platform. You're directly involved in particularly commercial sales, rental transactions, that kind of stuff. What trends have you seen change from pre-COVID to today, just in terms of sales, rental behavior that you've seen on the platform? Maybe just share a little bit about that.
Well, firstly, there hasn't been that much activity. We've all been...
Okay, well, that's a good point.
We're all trying to find our next bottle of red wine, I suppose. That's probably what people occupied. But I think there are two angles to this. One is obviously what the economy is going to do and how quick that recovery is, and then the other is what are the trends that have come out of COVID. And I think the first one is, and then Andrea I think speaks clearly to it, is that when you listen to him, he's not selling GLA anymore. He's selling a product. When you listen to Ellen, he's not selling GLA, he's selling a product. And so I think commercial space is going to have to move from just selling me 500 square meters of blank white box space to selling a product. I think hospitality, if you think about it, when I go to an hotel, I'm not actually renting the 20 square meters of space that I sleep in for the night. I'm buying a product, and that product's pricing can vary from a 1-star to a 7-star, and it has very little to do with the size of the room or the comfort of the bed, but with all those add-ons to it. And so I think you're going to see that landlords are going to need to start offering a product that differentiates it from just the GLA. I think that's the one. On the other hand, I think the psychology of commercial space is that you can't work from home. You can work from home, but mentally you need to sometimes go to a different space. Corporate culture can't be built when my 500 staff members sit at home. it gets built in an environment. And so I do agree with Alan that we're going to see it. We found that it was quite easy to decentralize. People are able to work from home, and so I think you're going to start seeing decentralized offices. I think if you take an example, you may have your head office in the city, but nothing stops you from having a satellite office in Khayelitsha. Nothing stops you from having another one in Bellville. And so having staff come into those points and still run your business. I think you're going to start seeing a decentralization of it. But I think the psychology of working in a space is something that is important. Of course, Eskom is going to help us get back to the office, because yesterday my staff at different times of the day were unable to work because their routers were down or the likes. And so, and I don't think any of us have the kind of wherewithal to be able to give each of our staff members the ability to be off grid. But we can do that within our office environments. And over the last few years, with green building requirements and criteria had been put in, one is able to be more efficient at the office. So I think you're going to see that go back. In respect of the rest of it, I think what you're going to, so it's, I don't buy into this, we're all going to work from home, we're all going to sit at home. I think another one element about, and I'm speaking specifically around the office space, is that, you know, it's very easy to make an assumption that people can work from home when you're a middle class South African. I've got a study, I've got pretty sharp internet, etc. I can work from home. A lot of people in administration, a lot of people who work for you live in small homes. They've got kids, the dog's barking, there's all of that. In some instances, a lot of people come to work as a refuge, you know, and I mean that very seriously. You see the high incidence of gender-based violence that has been happening. And when you speak to some staff members, often coming to work is that break from what is happening at home. And so I think you're going to see that return to the office. The negative side of it is that we've had this protracted lockdown of 111 days. It would have been great if we had a Rip van Winkle type approach and we could all wake up one morning and the 4 months didn't have the expenses. But you're seeing every day more and more businesses are folding. The longer that we stay closed, or in the stop-start situation, so yes, I think there's going to be the need for offices, but whether the economy is going to be able to carry it. But right. In the PropTech space, it's about efficiencies. You know, I think we're using our PropTech technology for being efficient. If I want to rent a space, I'm able to look at 5 spaces online in a virtual tour and then make a decision as to the 2 that I think I should go and look at. I'm able to make my offer online. I'm able to do my due diligence online. And I think those efficiencies are the important ones. We saw those efficiencies come through in other sectors, be it banking or travel sectors, where the efficiencies have remained, even though we still require the banks.
Great. Thanks, Wayne. So, Mike, you're the banker in the room. I mean, you know, what is your response, and ABSA in particular, to the COVID-19 pandemic, the challenges? I mean, there's obviously new lending opportunities, but there's also distressed assets flooding the market. I mean, how is this all going to impact the industry?
Yeah, Neil, look, I mean, our first priority clearly has been to get ourselves and our clients through the sort of eye of the storm, so to speak. And obviously that started late February, early March, you know, when sort of we had a sense of clarity of what was coming and lockdown came to the fore. We immediately sort of provided payment relief and restructuring options to clients, went immediately to the market on all of our owner-occupied books, because we recognized that would be a sector that would be hard hit and hard hit very, very quickly. So sort of provided blanket relief to all of those clients to the extent that they wanted them, for a combination of either 3 or 6 months payment relief, or for some capital moratoriums, for others, as I say, full relief for that period. We were then also just very responsive to any other of our investor clients who were facing, who foresaw similar stress in their portfolio. So I think, and you know, I'm not suggesting we were alone in that regard. I think, you know, most, if not all, the banks were very prudent, very proactive in their approach. You know, rather than waiting for the stress to manifest, sort of start talking very early. You know, at last count, we've probably had 35% of our entire book in terms of clients having taken up that relief. And as I say, you know, most of it is for a 3-month period, which would have been with effect from the beginning of March, so sort of March, April, May, or in other instances, April, May, June. Surprisingly, you know, we've been very receptive to those who've come back and said, you know, could they have an extension of that period? We understand that we're far from through it yet. We've been surprised by the relatively small number of clients who've looked to extend that relief period further. And obviously in our daily interactions with our clients across the countries, across the various sectors and the like, it would appear that, you know, there is some level of, and normality is far too strong a word to put to it, but some level of sort of activity returning. Our retail clients, and again, this is a very broad brush statement because I know one of the earlier comments were sort of rural retail may be better positioned than urban in some respects. You know, more workman-like convenience centres, I think, will probably get back to a level of normality quicker than those that have a high degree of discretionary spend in their centres. But as a general rule, the rental collections from our retailers are picking up. You know, if you look at May versus June versus what we've seen in July, it's an encouraging uptick. So a lot of them are sort of are trying to get back to some level of normality. The office sector, and I certainly concur with a number of the comments made here, we're certainly going to see a significant sectoral shift there and a very changing dynamic. But, you know, office tenants by and large are tied into longer term leases. I don't think, you know, that the stress is that immediate. You know, if you are a retailer and you're operating a restaurant, that pain is immediate and dire. If you're an office tenant, like a lot of us, you're still operating, your staff are by and large operating from home, but you're still functioning. So, you know, those rental collections have stood up reasonably well. And over and above that, of course, there are longer term leases. So I think that structural shift will take a little bit longer to manifest in the office sector. And as such, you know, the relief needed by some of those clients has been not to the same extent as perhaps our retail clients. You know, other sectors that have certainly surprised me on the upside, I suppose, in some respects, is the residential sector. You know, we've got quite a big development book that we're looking at. You know, our residential book is on the one hand some degree of investment stock, but that's maybe more on the affordable side, and that has held up reasonably well. I think, you know, if you just look at, let's call it Maslow's hierarchy of needs, people will pay their rent for their accommodation as one of the first charges because they want to remain in there. So that rental book has held up reasonably well, and I've been somewhat surprised and pleasantly so by the residential development market, particularly the mid-market, you know, not the top end sort of exclusive type of offerings, but let's call it the sort of 800 to 1.2 million rand mark. Those pre-sales, which we expected to start seeing falling off over the last few months, have held up reasonably well. And you know, through our conversations with our clients in that regard, I think there's a sense that people understand, you know, that their home environment will be changing, notwithstanding the debates around work from home over the long term and is it sustainable or not. People are suddenly saying, if I'm going to be here for longer, best I find myself an environment that one, own, I can control, and two, that is more conducive to that sort of working structure. So I think that's one of the reasons why we're seeing that market hold up, and there is a lot of pent-up demand. So to answer your question, Neil, it's early days. It's early days. Right. We are working with our clients. Clearly, you know, it would be naive to suggest that in a few months we'll be through the worst of this, and I certainly hear Erwin's comments, and I don't necessarily disagree with him. But at the moment, it's all about sort of holding hands and working out the best way we can get through this together. But there clearly is some degree of give or take on both sides of the fence.
Great stuff. Thanks, Mike. Dion, what can we learn from the international property market in terms of how they handle COVID-19 in the real estate sector? Or is South Africa unique?
Neil, just listening to the other panelists, I made a couple of notes, and I'll respond to your international question in a minute. But the thing that we've got to remind ourselves the whole time is the property industry serves people doing things. And if people are not doing things, then the industry is on its knees. It's as simple as that. But I've been asking myself, what can we do in difficult times? Now, in difficult times, just doing some reading on the property industry in the US post the Great Depression, and by the way, it took 27 years for the New York market to recover post-Great Depression. So anybody voted for shorter than 27 years, I think we need to think about some international examples. But the US at the moment seems to be going out of its way at state level, at municipal city level, to facilitate experimentation. Now, if any of the asset managers out there currently want to experiment, then they're going to run the gauntlet of building plan approval processes, NIMBYism, not in my backyard, public responses, etc. But now is the time that we've got to create an environment for experimentation. Assets. What is the asset? Is the building the asset, or the land opportunity and the location the asset? And if it takes you 6 months to be able to change your building, to experiment with something different, to create a different offering, Wayne made the point, it's not about the GLA, it's about the experience and the lifestyle. But if the process is so cumbersome for you to experiment and to change, then the risk is too high, the cost is too high, the time. At the moment, we are expected in the industry to preempt the market in 3 to 5 years' time, because that's how long it takes you to get your statutory approvals. Now, you need one hell of a big crystal ball to be able to guarantee the outcome in 5 years' time. But that's the environment we're working on. The other factor, which for me is quite a concerning one, is, when I started my career 25 odd years ago, we used to plug in a number of about 12 to 15% in terms of operational costs and the feasibility. You're now plugging in 25 to 28%, right, of your feasibility goes to ops costs. Where does it go? It goes to municipal costs. And yet you're expected to insure yourself in terms of the grid, the electrical grid. Many people are experimenting with green technology, recirculating water, but we're still paying those operational costs to entities that don't necessarily deliver a service. So we've got to ask ourselves, has government made it too difficult, too costly to do property in South Africa? And then the other factor, which for me is a big concern, and again, this is where we've got to think ahead, is how do we protect production capacity? How do we look after our consulting, built environment professionals, our contractors, for when the market picks up? Now, at the moment, they're all left out there to fend for themselves. But if we analyze it, then it's the same consultants and the same contractors that could potentially service public sector projects. So are we fast-tracking public sector projects to ensure our consulting and our contracting capacity remains intact for when the market recovers? So what can we learn from the international examples? I think we've got to be less precious about property in South Africa. I think we've got to facilitate experimentation. I was reading an article in the Urban Land Institute talking about developers in Florida pivoting their existing schemes within weeks, i.e. agreeing with local authorities that where they were going was not necessarily right angle, and they were allowed to change their building plans and their site development plans. Locally in the Western Cape, you would be in for a 6 to 9 month process if you're lucky to change your site development plan. And then I think the other thing which for me is an opportunity, and again, not necessarily based on international happenings, but I think a lot of commentators are predicting that lifestyle choices will make a big change in where property goes going forward. And I think there's an incredible opportunity for smaller municipalities outside of the metros to seriously start competing. Just looking at Andrea's industry, in the Western Cape, the N1 and the N2 actually come together in Worcester. Well, the N1 and the N2 don't come together, but if you look at the upgrades of the roads from Swellendam, should Worcester not become a logistics hub for the Southern Cape, the Northern Cape, and everything happening in Gauteng? And is the local authority like the Worcester area stepping up to the plate? What do other local authorities have to offer? the Swartland municipality recently apologized for their building plan approval process dropping from 9 days to 12 days. Well, I mean, a local authority that is able to pass a building plan in 12 days should be put on the pedestal, and investors should be looking at what we can get there. So I suspect that we're also going to start seeing people making lifestyle choices, going to the smaller towns, subject to data, subject to their ability to function in the smaller places, and even attracting their staff to move out of the metros. So I think it's an interesting time, but I must say I'm extremely concerned at how difficult it is to experiment in property in South Africa, and I think that's what we can learn from other markets.
Great, thank you panel for your inputs. We've done the full round. I can't believe where the time has gone. We are quite a large panel, so obviously I'm very conscious of time. We've got a lot of questions that have come in, and we won't get to all of them, but what I'd like to do is and I'm not going to give it to a specific panelist, and I would like to sort of encourage debate between yourselves, and we can have the wrap up as a lot shorter at the end, and rather let's have a debate, and also try and keep it answers a little bit shorter. Let's get to the municipality utility costs. Now we see everybody has come under pressure, but we still see utility costs rising. We're seeing electricity, which we're in stage 1 again, stage 2. I'm just going to put it to the panels, just in terms, what do we need to do to approach government, the municipalities, for them to realize that while we're going backwards in a lot of our returns and we're contracting, how do we address the issue of utilities? I think, Evan, you might have a view on that. Do you want to give it a go? Just switch on there, please. You muted there, Evan. Just switch on.
I was trying Wayne's proposal to double click on the space bar, and it didn't work. Wayne, you've got a problem. Yeah, I'm afraid the problem of utilities, of course, it's a governance problem. We used to have one of the cheapest electricity tariffs in the world, barring, I think, New Zealand and Norway, which have hydroelectricity. And now, of course, we are amongst the more expensive ones. And the problem with the electricity is there's no short-term solution. The part solution, of course, is to go for green electricity more aggressively, and somehow, I don't know why, the government has been reticent about this. Hopefully they're going to change this, but I still don't see anything happening, actually. So the short answer is that electricity, there's no short-term answer for electricity. It's got to become more expensive because Eskom is actually technically bankrupt, and somebody's got to pay for it. So either the government keeps on paying subsidies to Eskom, or it does it directly through the consumer, but somehow the consumer is going to pay for it. As for water, South Africa is a water scarce country, and it's inevitable that the price of water will have to keep on rising. We'll just have to get used to it and save as much as possible and recycle as much as possible. Once again, there's no short-term answer because, in fact, it may become worse because of climate change. So I'm afraid we will have to get used to it.
Okay. The rest of the panelists, do you want to make some comments? Anybody? Andrea, looks like you want to respond to that.
Yeah, I mean, I completely agree with Erwin. I mean, unfortunately, we're in a situation where many years of extremely poor governance has resulted in a completely dysfunctional electricity service provider. And then you add to that a government that obviously insists on wanting to retain control of the utility as well. And the combination really doesn't spell for very encouraging news, to be totally frank. I mean, if it was opened up and the private sector was allowed to operate in that space, I would think after maybe an initial uptick, I think competition would eventually result in energy prices becoming more in line with world prices. But in terms of the thinking from the government, I mean, I can't see that happening anytime soon. So the expectation from our side is that electricity, water prices will keep going, and hence, the essence of the sustainability issues that we are incorporating into our buildings, we see them as a massive carrot to attract customers to come to us, in knowing that some of these things, some of these costs can be alleviated by the technologies that we're incorporating into our buildings.
Great, thanks. I'm going to pivot through to Alan. Alan, a question that's specifically for you, but I'm going to ask the rest of the panelists if they want to. Obviously, I think it's quite general. Do you see commercial spaces being repurposed into residential as the office industry continues to struggle? I mean, you are essentially a tenant of a commercial property owner. Do you want to? What's your views on that?
No, I think that a lot of commercial space may be repurposed, but not only to residential. I think mixed-use developments will become a lot more popular for obvious reasons. It just makes it a lot more convenient. It allows for more efficiency and less commutes. People are able to go to gym, shop, work, and live literally in the same sort of area. So I think that will probably become a lot more popular. We have seen a lot of commercial property being repurposed, particularly for student accommodation, which I think also, there will be a limit in terms of how many conversions you can do in that space. But in my opinion, I think that the office is here to stay. There will always be a need for an office, albeit, as Wayne said, in a slightly different manner. The product might change a little bit differently. Landlords might add value to the product, as opposed to then just selling GLA, selling a contract with a full sort of service offering attached to it.
Okay, Alan, Wayne, sorry, you stuck up your hand. Press your space bar, please.
Yes, I agree with Alan. I think one of the problems, and Dion touched on it, is that with the lag in approvals, by the time we get our act together and get our approvals in place, the world has moved on already, and so our ability to supply a need is quite often 5 years after the need has arisen and a different need has kicked in. But I do also think that it does create an opportunity for us to repurpose how we live, work, and play. When I was doing township developments 20 odd years ago, it was premised on the fact that apartheid planning had seen us create dormitory townships where people lived, where they slept and they worked and shopped elsewhere, and we did. But actually, all our suburbs are almost dormitory townships in that you go home and there's very little that happens. And so one of the elements, for example, if you take some of the areas, one would be able to bring people back into the city. You create a better work, live, play area. If I was able to live close to where I work, for example, let's say in the CBD of Cape Town, that does allow for, it deals with so many of the other issues we deal with: congestion, ability to get to work, the ability for, if you take Cape Town as an example again, 5 o'clock in the afternoon on a normal work day, the city winds down because everybody catches transport and leaves the city. And so it doesn't have that vibrancy that one sees in some of the global cities. And I think this does create potentially that opportunity for that to happen. But my big fear is that the planning approvals is going to be so onerous and tedious that we're going to lag way behind the demand cycle that comes from it.
Right, great. Okay, gentlemen, there's a lot of questions here. It's related to, obviously, repurposing REITs and taxation, special concessions from COVID. And I just want to quickly run through them, because I want you to consider your wrap-up I'm going to ask each panelist just to give your final wrap up on the way forward. There's even a question on land expropriation. I think that's a webinar by itself, and a general one for all the panelists in terms of, you know, the culture and the future of office working spaces. And then a question for Alan says, and I like where they say, do you think the WeWork model, and it's not the WeWork model, it's the Regis model, is the future of commercial property? Maybe you can take that into consideration, because who agrees we actually have been through the eye of the storm, and it's probably be quite a general question that you'd like to look at. I'm finding that more of my office tenants are more uncertain as to business sustainability, more than they were in March and April. So I just want everybody just to give, we are running out of time, unfortunately. I think we've had a quality discussion. Unfortunately, we haven't managed to get to everything. I want each panelist just to kind of give a summation of where they see things are, where it's going to go, and maybe just some optimism to help us to give our audience something positive, maybe a takeaway or something that they could use going forward. I'm going to start off with you, Alvin.
Are you really asking me to say something positive? You must be joking.
You've got to end off on a good note.
Yeah. Well, you know, there's no simple solution, of course. It's going to be a combination of all the above. All the things that have been said today, it's going to be a combination. There's no single silver bullet that's going to change things. It's going to be a gradual grind. And in the process of this grind, we are going to see shifts, gradual shifts in human behavior. The most important thing I would like to point out about human behavior is that we are all animals, social animals, and you can't wish away the office completely. It's all very well to do it for 3 months or 4 months, but when it comes to training and to build up relationships, because it's all about the relationships in a way, if you come to think of it, you actually need an office. So I think my best guess is that the demand for office space over a few years' time, gradually it will reduce by about 20% because of this shift that's taking place. That's my best guess, but it's purely guess.
Excellent. Thanks, Erwin. Marius, your wrap up, please. And I know you've been very quiet in your corner over there, but yeah, give us your summation.
I agree with Erwin. You know, we are creatures of habit, and I think that's one of the challenges that we do have as investors, that we do go down that route that we had followed before. But I think the landscape is going to be somewhat different. Mixed use is probably the way that we're going to be gravitating. Now, whether that's by choice or it's forced upon us because we have vacancies, we're going to have to start looking at things differently. And I think one of the things that I enjoyed, the comment I enjoyed today was from Andrea, that you need to look at property beyond just the bricks and mortar. So, you know, take something as simple as demographics. You know, we in South Africa, we're in a society where our life expectancy is growing. You know, our growth rate in our population is still increasing. So that's not just that we increase by 1% every year, but we're actually increasing by 1%, then 1.2, then 1.3. You know, we're still in a society where there's a lot of urbanization is taking place, aging population. And I think those are the sorts of things that one needs to think about. And when you start putting that into the mix, that's when you start thinking beyond, you know, what are we going to do with the office, or how are we going to reinvent retail? Because there's other components that comes into play and that makes the society work. And so I would say one needs to just think a little bit, not out the box, but maybe just think whether, you know, what you've been doing and everyone's been doing for the last few decades, whether you can continue doing that going forward. And I think that, yes, you can. We've got a great management team and the guys have found a niche, but I think there's also components, and a significant component of it going forward, we're going to have to do things differently.
Yeah. Great. Mike, I'm going to ask you to do your wrap up. I see there's the chat box has actually been quite busy. And it says Australian office property market is a 15% hit. And then, of course, Herman Klopper says the cost of capital is 42% down. That is positive. So you being a banker, of course, you know, interest rates have come down. So maybe that's one of the most positive things we can talk about, the cost of money. Do you want to maybe just wrap up in terms of that and give us something to leave on a great positive note going forward? Thanks, Mike.
Well, look, there's no question that's been a much needed stimulus to the broader economy and to the property industry specifically. You know, our view is that the rates will remain relatively low for the foreseeable future. So this is not a sort of short-term dip and then it followed by a significant spike. You know, all things being equal. So that certainly is encouraging. And I think that talks to sort of our approach, I suppose, to property investment and development, certainly in the medium to longer term. And I think right now it's all about cash flow. You know, there's a lot of debates going on around value and what is or isn't the value of certain assets. And I think, you know, right now value is very notional. It's very subjective. The bid-ask differential, I think, is quite big now. So we're seeing very little trading activity because, you know, there just simply isn't the meeting of minds between buyers and sellers at the moment. And therefore, I would caution people to place too much reliance right now on what perceived value is. It's all about cash flow, current and projected. And I think those sensitivities and those feasibilities are key in terms of investment and development decisions. And to that end, certainly the current interest rate environment is very attractive. I would also just sort of suggest people consider, you know, for those, you know, property as has been mentioned previously as a longer term game. It is a sector that, you know, we've got to look beyond the immediacy of the current environment. And as such, you know, people who are taking longer term investment decisions, it's also a very good time to consider some hedging in place. You know, yes, you will pay a slight premium to what your variable rate is, but it's a very, very cheap form of insurance right now. Yeah, so I think that's, you know, and then maybe just in terms of, again, looking at the industry, Neil, you know, there's no question that there's still some very dark clouds around, but, you know, I look at it and I listen to what Alan is saying, and I certainly think repurposing of offices is key. You know, I certainly take the point as well that we are social animals. We need that level of interaction. And therefore, I think there is a need and a place for people to meet. Now, that's certainly, I don't think anyone's suggesting it will be the offices of old. But meeting places are essential, repurposing of those spaces. I go so far as to think whether you won't even have small sort of meeting venues, many convention facilities where teams could meet once or twice or 3 times a month, you know, as opposed to the conventional offices. One even wonders whether coffee shops are going to take on new dynamics, you know, in terms of meeting places for clients and the like. So those things, you know, I see as opportunities. Maurice has mentioned mixed use. I think that is key just in terms of people's live, work, play dynamic. I think this environment has been a huge catalyst for that type of thinking. We've seen a big uptick in demand for retirement facilities. I think people are feeling a little bit more fragile, a little bit more vulnerable, or suddenly looking for environments that have the necessary care and security that they need. You know, these are all opportunities that we see, certainly logistics into Andrea's world, the supply chain dynamic that's playing out now, data centers. You know, these are just some of the sectors that we think could provide opportunity. And then, as I said earlier, I think the residential market right now for the end user, you know, you're suddenly borrowing at very attractive rates. You're now saying, you know, well, let me get a high degree of certainty for my own future. Let me find myself an environment that is conducive to building my future, both from a live and a work perspective. So I think that plays into the residential market. Now, I think the owner-occupier market, people may start looking more closely at buying their own premises now, no longer being at the whim of a landlord, because we can see now, you know, vulnerable you can be. So these are just some thoughts. But, you know, there's every cloud, and these are big, deep, dark clouds, but every cloud does have a silver lining. And I think if we look hard enough.
Wonderful. Nice way to end off. We need something positive. Thanks, Mike. Wayne, you'll wrap up there, please.
Let me just unmute. I think I agree with everybody, and it's almost difficult to add to it. Suffice to say that I think we mustn't build our trends on behaviors that are currently enforced. You know, we haven't stopped being a drinking nation purely because there are regulations that bar us from buying alcohol, and the same applies to mobility, etc. And so I think certain trends are seeing themselves play play out now purely because there are regulations that enforce it. But I think there are a lot of things we will go back to. We all want to go on holiday. The fact that we can't is an enforced one. It doesn't mean it's going to stay. And I think there is obviously light at the end of the tunnel. There's always light at the end of the tunnel. I think it's about how protracted this is going to be. But I do also believe that there are going to be businesses that are going to go out of business, and they may have gone out of, or may go out of business in a much quicker time, but it was probably just something that was going to happen. You know, the world changes, there are new technologies that come in, those new technologies supersede old ones, and then sometimes you need to clear the debts. I think it was said that bankruptcy allows for other businesses to come into play, and on the buy side, they always say buy when there's blood on the floor, you know, and
yeah.
I'm starting to bleed a little, so I'm pretty sure that is a good time to be a buyer. You know, I think also development space, often as developers, you need a pipeline, and to have a pipeline, you need to be able to buy, and so those opportunities do lend themselves in this current environment. I don't believe it's all doom and gloom.
Great. Alan? Do you want to wrap up?
Yeah, Neil, thank you.
That's a
Just
pleasure.
a couple of points. I think when we look at sort of where commercial property is going, you know, we kind of have to look at what research is telling us and what the stats are telling us. And I made reference to JLL. They predict that sort of by 2030, about 30% of commercial real estate will be flexible co-working. So to answer, who was it, Tawanda's comment about is the WeWork model the model for the future? The answer is yes, but I would argue not so much the WeWork model, but the flexible co-working model is certainly the answer for commercial space. But where we and a lot of the other sort of flexible co-working brands differ from WeWork is WeWork looks at centralizing in the main metro areas, and I think what you'll see is just like we were talking about the retail development. I think you'll see a lot of the commercial space going into the smaller towns and cities and into the suburban areas, just to make it more convenient. I think there'll be an uptake in sort of in flexible co-working and I think that a lot more companies will start adopting or implementing a strategy that allows for that remote type work environment.
Wonderful. Thanks, Alan. Thank you for your contribution. Yeah. Wonderful you today. Dion, if you could give us your wrap up, please. And yes, how can we move forward? How can we get positive? We need help from government, surely.
The wonderful story about property development is you know, I always say to people, there's a fundamental difference between a developer and an asset manager, culturally and otherwise. Now, the developers are the guys that are skilled and will go out and sniff for new opportunities. And I think that's the exciting part. The industry is not going to be dead. People are going to be looking for positive disruptors. I think there are a couple of structural issues that need to be addressed, and they need to be called by name. I wanted to chip in a bit earlier just to remind everybody that the metros just voted themselves between 8 and 10% salary increases. You know, and those things need to stop. We need to start to call a spade a spade. But at the same time, the most incredible positive disruptor is proactive provision of infrastructure. And we are going to be banging the door with local authorities and provincial governments and national as well. Every capital cent on capital budgets must be spent, and it must be spent in proactive infrastructure provision. The retail sector had an incredible boom because of spare transport capacity. Now, most of we say that the markets have dried up. Actually, people don't want to sit in the traffic for 2 hours. So let's start looking at infrastructure provision as a positive disruptor. And then, seeking out new markets. You know, I'm always fascinated when I look at some of the property stats, and I realize some of the highest rentals being paid in Cape Town in places like Dunoon. Residential rooms getting 270, 280 Rand a square meter. You know, there are opportunities out there, and I think we all need to get out of our comfort zones and go and look at new opportunities and also look across sectors. I think the tradition of only sticking to retail or only commercial or only industrial, I think the pressure is going to be on to think multilaterally at how property as a holistic sector functions. And we need to partner with government. And I'm happy to say, you know, the COVID crisis has caused government to come to the table. Not enough yet, but for the first time, we're actually getting calls from officials and politicians saying, what can we do? That's a first. And we need to capitalize on that and use the opportunity. So I'm not that negative. I appreciate that the markets are in the doldrums, but we pay to be positive. And I think the developer will go out and find new opportunities.
Fantastic. And last but not least, Andrea, and that's why I put you right at the end, because you built a formidable business, and we can learn from this whole PropTech thing. And maybe you can just give us, I mean, you're doing things, you seem to be bucking the trend, as I mentioned earlier on. So maybe give us your wrap up and your thoughts in terms of what everybody said and your thoughts going forward.
I mean, my wrap is that, I mean, the world is changing. I mean, I agree with various of the panelists that discussed, you know, where the world's going. I mean, there's some people saying that e-commerce is going to take over the world and that shopping centers are all going to close down. And for someone that would love that to be true, I categorically believe that's completely untrue. And I agree with various panelists in terms of the various, you know, sectors, be it retail and be it office, that there may be sort of certain difficulties, but I mean, if you look at office, for instance, in a market like Holland, it's as strong as the logistics sector, you know. So the demands are there. You know, people are social beings. People want to work in certain environments. However, this pandemic will change things, and the reality of it is, you know, the waterfront, will it be relevant in a year's time? Of course, it's always going to be relevant. The waterfront is the most visited tourist attraction in South Africa. How can it go from being in that position to being completely null and void? So I completely agree with everybody. I do think, though, that landlords are going to just need to become more creative, and the really strong management teams that can think outside the box, that can look for ideas. They can travel the world. They can steal with their eyes, which is what we all do, I suppose, to a certain extent, and then mix that with some of that South African flair. Because don't forget, I mean, South Africa gave the Poms Donnie Gordon. You know, they didn't know what a shopping center was until he went there. Kind of thing. So I think we've got a history in South Africa of real competency in terms of development. And do we get everything right? No, we don't. But I think that leaves me really positive about where the property sector can bounce back to. You know, and maybe we had a run that maybe almost became too easy for a period of time, and some people maybe got a bit too lazy. And this has just been a bit of a shake-up and a wake-up call. But I have every confidence that my colleagues in the REIT space that are not in my sector but are in other sectors, that there's some seriously competent people in the industry, and I think with time and innovation, I think the property industry will live to fight another day, and it will remain a fundamentally solid portion of anybody's investment portfolio.
I think that's such a wonderful way to finish, Andrea. Thank you, Andrea. Thank you to the entire panelists. Thank you very much to each and every single one of you. I think we really had a quality discussion. Unfortunately, we have run out of time. I think there's an opportunity to really uncover retail by itself, to uncover the logistics sector, industrial, and obviously the office sector, and even hospitality for that matter. But I really want to thank you. I think it's been a quality discussion. And to you, the audience, thank you for your questions. Those that are unanswered or any queries you might have, we've asked you to reach out to some of the panelists if you want to reach out to them. But then if there's any questions, send it to either info@remag.co.za or post it onto our Facebook page, or you can post it on the Ask the Property Expert section on the REIMag website. So thank you, wonderful. My final thoughts are, if you think education is expensive, consider combination of ignorance coupled with too much power could be dire. So thank you very much, everybody. Thank you. It's wonderful. I just got 2 reminders for you. First of all, next week's webinar, I won't be in the host seat. That's going to be Derek Watts. He will be talking, and the topic next week is alternative investments. So I encourage you to join us next week. That's next Wednesday, our Wednesday webinar from 11 o'clock until 12:30. Thank you very much for hanging on. I know it was a longer discussion, big panel today. And also I want to remind you, we changed our date of our first-time home buyers property webinar. It's a whole full-day virtual property masterclass, which will be hosted by Derek and Ipaleng Bakari, and it's going to be on Wednesday, the 14th of October from 9 o'clock until 12 o'clock. We already have over 2,000 people registered, so I just want to remind you that the date has changed, and we're moving it to a little bit later because there's been great demand. And on this note, I want to thank you, the panelists. I want to thank you, the audience. I think you've all been fantastic. Thank you very much, everybody, and we look forward to seeing you next week. With that, it's Neil Peterson signing out from Let's Talk Property.
Hi, I'm Derek Watts. Blythedale Coastal Estate is Africa's first eco-smart city. 80% off-grid, solar power, desalination plant, fiber to the home and 5G Wi-Fi. Holistic estate app, smart estate utility management, smart home, 1,000 hectares of inclusive mixed-use development, eco-design guidelines, 6 kilometers of beach and river frontage, 320 hectares of indigenous forest. Cheers for now, and I hope you'll join me as a neighbor in the Blythedale Coastal Estate community.